Imagine being in a situation where your time is running out, and your main concern is making sure your family is financially secure after you're gone. That's the heart-wrenching reality Walter White faced in the hit series Breaking Bad. But what if there was a legal way to build a lasting legacy and provide for your loved ones, even after you're no longer around? Enter monthly dividend stocks, the surprising investment strategy that could be the key to securing your family's financial future without resorting to desperate measures. Welcome to $1 Million YouTube channel. I'm Andrew, and in this video, we'll discover what monthly dividend stocks are, the advantages of investing in monthly dividend stocks, the selection criteria, 5 mighty dividends that can stand the test of time, and the shockingly low investment needed to start building a substantial monthly income stream that can pay your loved ones long after you're gone. First, let's learn what monthly dividend stocks are. Monthly dividend stocks are a unique type of investment that pays out dividends to shareholders every month, instead of the more typical quarterly or annual payments. Companies that issue these stocks usually have stable cash flows and a strong commitment to providing regular income to their investors. Investing in monthly dividend stocks offers several key advantages. First, the monthly payouts create a consistent income stream, which can be especially helpful for budgeting and financial planning. This is particularly beneficial for people who depend on these dividends to cover living expenses or generate passive income. Second, the reliable cash flow from monthly dividends can be reinvested, allowing your wealth to compound over time and potentially boosting long-term returns. Finally, monthly dividend stocks are often more attractive to income-focused investors, such as retirees or those seeking steady passive income, as the frequent dividends provide stability and reduce the need to sell shares for income. When selecting monthly dividend stocks, there are 3 main criteria to consider. The first is dividend yield, which tells you how much income you can expect relative to the stock's price. However, it's crucial to ensure that the company can sustain these dividend payments in the long run. The second factor is the company's stability. Look for financially healthy companies with strong business foundations and consistent earnings, as this indicates they are more likely to continue paying dividends. The third criterion is the company's growth potential. Ideally, you want to find stocks that not only pay regular dividends, but also have the potential to increase in value over time. By carefully considering these criteria, you can identify stocks that provide a reliable income, have a stable foundation, and offer the potential for future growth. While investing in monthly dividend stocks may involve slightly more risk than some other investment options, the potential for significant and consistent payouts can make them an attractive choice for many investors. Now, let's take a closer look at 5 specific monthly dividend stocks that could potentially help you generate a steady income stream. These stocks are ranked from lowest to highest yield, and we'll also discuss how much you would need to invest in order to earn $2,000 per month in dividend income. Leading the pack in our lineup of dividend-paying stocks is none other than Stag Industrial, boasting an impressive 4.15% yield. Focusing on industrial properties like warehouses and light industrial facilities, Stag Industrial has capitalized on the surging demand driven by the e-commerce boom and the resurgence of domestic manufacturing in the United States. These factors have led to high occupancy rates and rising rental prices, enabling Stag Industrial to generate a reliable and growing rental income stream. Since its IPO a decade ago, Stag Industrial has consistently expanded its portfolio, adding over 400 properties. This aggressive growth strategy has resulted in a diverse portfolio of 569 buildings across 41 states, enhancing the company's income-generating capabilities. Stag Industrial's commitment to increasing its dividend payouts, backed by its successful portfolio expansion, makes it an attractive option for investors seeking a steady and growing income stream. By investing in Stag Industrial, investors can benefit from the REIT's strategic focus on the resilient industrial real estate sector, which has demonstrated strong demand, high occupancy levels, and the potential for rising rental rates. With its solid track record and promising future prospects, Stag Industrial presents a compelling opportunity for those looking to generate reliable rental income through dividend investing. Realty Income, the second stock on our list, boasts a yield of 5.94% and has earned its reputation as the leading provider of monthly dividend stocks. The company takes pride in its title as the monthly dividend company, backed by an impressive track record of paying over 600 consecutive monthly dividends. Since its IPO in 1994, Realty Income has increased its dividend more than 100 times, achieving a compound annual growth rate of 4.4% and earning the prestigious status of a dividend aristocrat. In 2021, Realty Income made strategic moves to enhance its portfolio, including the acquisition of Verite, another prominent REIT, and the purchase of approximately $6 billion worth of properties in smaller deals. These actions are expected to boost the company's cash flow per share, positioning it well for future dividend growth. As a dividend aristocrat, Realty Income demonstrates an unwavering commitment to long-term dividend growth, instilling confidence in investors who seek reliable income over an extended period. The third stock on our list is Oxford Square Capital Corporation, ARR, which offers a forward dividend yield of 14.05%. Operating as a business development company, BDC, Oxford Square Capital functions similarly to a hedge fund, actively seeking profitable investment opportunities across various sectors. The company focuses its investments on Goldilocks companies, enterprises with annual revenues of less than $200 million. These companies are substantial and viable entities, yet not small enough to rely solely on local bank financing. Oxford Square Capital leverages its expertise to identify investment opportunities that offer the potential for attractive returns. The company's diversified approach and focus on optimally sized companies provide a level of stability and growth potential. However, it's crucial to remember that investments always carry risks, and consulting with a financial advisor is recommended to understand the tax implications involved. Armor Residential REIT Incorporated, ARR, the fifth stock on our list, offers a compelling dividend yield of 14.61%. As a REIT specializing in government-protected residential mortgages, ARR focuses on agency debt backed by fixed-rate, hybrid, and adjustable-rate home loans. Operating as a REIT mandates that the company distribute at least 90% of its taxable income to shareholders in the form of dividends, creating a structure for substantial and consistent dividend payouts. While ARR's high dividend yield is attractive, it's essential to keep in mind that stock performance can be subject to short-term fluctuations due to various market factors. Nonetheless, ARR's concentration on government-backed residential mortgages provides a level of stability and potential for steady income generation. Number 4, Orchid Island Capital, ORC, offers an enticing forward dividend yield of 17.39%. As a specialty finance company, Orchid Island Capital focuses on investing in residential mortgage-backed securities, RMBS, within the real estate sector. By generating income from interest payments on these underlying residential mortgages, the company is able to distribute substantial dividends to its shareholders. In line with other real estate investment trusts, Orchid Island Capital is committed to sharing at least 90% of its taxable income with investors through dividend payouts. This provides an attractive opportunity for individuals who may not have the significant capital required to directly invest in real estate properties. By owning shares in Orchid Island Capital, investors can indirectly participate in the real estate market and benefit from the company's investments in RMBS, potentially receiving a portion of the profits generated. Now that we've explored these 5 monthly dividend stocks, I'd love to hear your thoughts. Which of these stocks piques your interest the most? Do you have any experience investing in monthly dividend stocks, or are you considering adding them to your portfolio? Let me know in the comments below. I'm always eager to learn from your insights and experiences. Now, let's dive into the investment required to generate a specific monthly income from these stocks. To keep things simple, we'll assume an equal investment across all 5 stocks and calculate the total amount needed to earn $2,000 per month. First, we need to find the average annual return of the 5 stocks. To do this, we'll add up the individual returns and divide by 5. The returns are 4.15%, 5.94%, 14.05%, 17.39%, and 14.61%. So, the calculation looks like this: 4.15% plus 5.94% plus 14.05% plus 17.39% plus 14.61%. divided by 5 equals 11.22%. This 11.22% represents the average annual return we can expect from our investments. Since our goal is to generate $2,000 per month, we need to determine the total annual income required. To do this, we multiply $2,000 by 12 months, which gives us $24,000 per year. Now, to calculate the total investment needed to achieve this annual income, we divide the desired annual income by the average annual return percentage. In this case, $24,000 divided by 11.22% equals $213,904. So, to generate a monthly income of $2,000 from these 5 monthly dividend stocks, you would need to invest a total of $213,904, assuming an equal distribution